I'm joined by technical analysis specialist and expert Nicole Elliott from Mizuho and James Bevan, the Chief Investment Officer at CCLA. Thank you so much to you both for coming in today. Nicole, I just want to start with you because we've actually touched some support levels this week. The FTSE was below the 5,000 points. The Dow Jones also went below one of their support levels, and yet it's gained. How do you explain this?
Yeah, I mean, it's massive moves. I'd say the main thing is the massive volatility that we've had this week, and in fact, and the volume also in May on many instruments has been tremendous. And it is precisely because we are testing these key levels. Many markets have had seen closes below their 50-day and 200-day moving average, and that's why we're thrashing around on the currencies too.
Nicole, let's actually see if we can get some of those graphics up for you so that we can have a look and you can talk us through some of those technical support levels. And of course, we'll also be speaking to James about what it means for his investment strategy. There you go, the Dow Jones. All right, that support line, does it mean that we're now on a bull market?
No, I don't think so, I'm afraid. No, I'm in the pessimist camp. I think the bounce that we've had yesterday and a little bit this morning is important, but we're still below the halfway point of May's range. Yeah? So you had a massive fall, then we've bounced, but we're still below the halfway point in the Dow, in the dollar yen, in euro yen, in lots of things.
James, what does it mean for your investment strategy? Would you, for example, be holding a lot more cash at the moment because of the volatility we've seen on the markets?
Well, in contrast to Nicole, actually, I'm an optimist, and I'm an optimist on several grounds. And to start with, I think the economic fundamentals are rather better than some suspect. And that is certainly coming through in terms of the corporate earnings numbers, so companies demonstrating better profits than many people had dared anticipate. If you were then to say what's actually in the price, if you take 2 years of forward estimates from analysts, which I suspect are quite conservative, and then assume that for the rest of a company's life in perpetuity, they simply revert to trend earnings numbers, then I think that the forward-looking risk premium for equity investment is at the moment about 6 percentage points against the long-run average of around 3.5, and against what's probably right about 4 3/4 at the moment, given that there are still vagaries and uncertainties for which we have to contend. Now, that means that actually I think there's considerable upside for equities on a 3 or 12-month view.
And this is what kind of sectors?
Well, I think as a style, it's quality growth. In terms of sectors, I think global technology is very well placed. Companies like Taiwan Semiconductor, companies like Compal. I also think that European telecommunications are really very interesting now. And there are some very high dividend yields from these sorts of stocks.
Nicole, I want to go through with you actually the chart for gold, because this is an interesting one. It's really an upwards trend, slowly but steadily. If we lift that up and have a look at what the technicals actually tell us, there you go. Record highs for gold. So is it going to continue going higher?
I mean, it's steaming ahead. This is, this is a very, very powerful rally indeed. And I think it really shows that people have very little faith in the banking system. I mean, that's at the core of so many problems that we've had over the last 3 years, and they're not going away. They haven't got better. And money is just flying into Switzerland as well. Anything that's sort of clean, not tarnished, is just, it's terrifying. I mean, it's just stomping over the border, and this is another one, they're all going into this. It's on the way up still.
Michael, can I ask you, I mean, I think that gold is in a bubble because I look at the fundamentals that support gold, and I absolutely accept there is substantial momentum behind the gold price, but actually I think that it is now wing and a prayer stuff rather than solid. Where do you stand on that issue?
Yes, there are lots of things that are in bubble territory, and these are things that are for capital preservation. I mean, to give you some idea, a Swiss 2-year government bond is yielding 7 basis points.
Absolutely.
7. I mean, but people would rather that than stick it in a dodgy bank that might, take your money away tomorrow.
That's
the problem.
So we accept as an optimist. So you would happily also buy banking stocks.
Well, no, let's be very clear. There are absolutely risks out there which are being played out in the markets and which demonstrate why we have so much volatility at present. And those risks absolutely are resident within the banking sector. So I'm extremely nervous of banks. But the banks are not the market, and I see very good quality companies with strong balance sheets, with high free cash flow yields, generating very substantial profits for shareholders and giving those profits back in the form of high dividend yields. Why would one want to buy government bonds, to go back to Nicole's point on the Swissy, when actually the real rate, what's left after inflation, is now negative? And I think that's a really bad bet.
All right, James, Nicole, thank you so much.